Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market events that are currently moving prices. Of course, the biggest thing happening in the markets right now is the Trump tariffs. You've had quite some good volatility, especially from yesterday, after Trump slapped tariffs on both Mexico and Canada, as well as China. And of course, there was a big reactions. There was panic. Then there were negotiations less than 24 hours later. And we saw the markets making a big, impressive recovery. So, fast forward this morning, we have had big news coming in from China. China also decided to slap some tariffs on the US. So we'll be talking about that. We'll be talking about the job market report that is coming later this afternoon. And of course, the US non-farm payrolls. That's the top event this week. And once you cover that, we'll do some technical analysis and try to understand the prevailing market setups and try to identify trading opportunities. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So let's get something started. So just give me a sec. All right, so let's start with the economic calendar and the top market events we're expecting today. So today being Tuesday, the 4th of February, there's quite a number of things happening. Among the main ones will be the JOLTS job openings report, which is coming up at 6 p.m. So when we talk about the JOLTS job openings, we are talking about the number of job advertisements during the reported month. In this case, we are looking at the month of January. And we're trying to understand the trend in this number of job openings. So it's usually taken as a leading indicator of the trends in the job market, where if there's a high number of job advertisements, it means that companies are looking to expand more, and it's usually a good sign of the economy as well as the job market. So on the other hand, if we see the number reducing, it's usually a bad signal, indicating that companies are cutting hiring. And as a result, it means that they're expecting to produce less or they're expecting less economic activity. So judging from what we are seeing in the trend or in the past couple of months, then you notice that there has been quite a general decline in the number of JOLTS job openings since the highest level that we saw in May 2022. So also notice that this was a cyclical thing that after we had the COVID-19 lockdowns and the US government was shut down, within that period, we had job openings really going down. Companies were not hiring because of the COVID-19 rules. So a majority of the strong growth that we saw in 2021 and 2022 was as a result of companies advertising again, getting people back to work. But then since the peak that we saw in May 2022, there has been a general decline in hiring. And now we are back to around COVID-19 levels, pre-COVID-19 levels. But then if you focus on a very short-term trend, and that's the job advertisements in the last 3 months, then you'd notice that there has been a general increase. So from the month of October, November, December, and then January, this is a 2 consecutive month gain in number of job openings. And we are hoping that in this report today, we could be seeing a much bigger increase. So also in the number of non-farm payrolls, they have also been increasing, and that has been a positive outcome, especially with the new administration of Trump. So hopefully we get a good number here. So why does this matter to traders and to investors in the market? Well, the Fed has a dual mandate. That's the Central Bank of the US, or the Federal Reserve, has a dual mandate. One is to stabilize prices, and the other one is to maintain full employment. So back in September last year, when the Fed decided to cut rates, it was because unemployment was increasing at a much faster, so they had to cut interest rates. So now, if we see the number of job openings increasing, that would bring more assurance that the US job market is strong, and that doesn't pressure the Fed to cut rates. And in that case, it's positive for the US dollar. So on the other hand, if the number of job openings are worsening, then that would be a red flag, and the Fed would be more pressured to consider cutting rates, and that would be negative for the US dollar. So when you combine this with the prevailing market information, which is basically Trump implementing tariffs on Canada, also tariffs on Mexico, China, and now he's looking forward to extend these tariffs to the UK as well as the Eurozone. The overall impact of these tariffs have been strengthening the dollar. So the more likely outcome or the best outcome for traders would be JOLTS job openings increasing at a much bigger pace than expected. And when you combine this with tariffs, that would be absolutely good for the dollar. So if we happen to see a big increase in JOLTS job openings, that would be really nice for dollar bulls, people who are looking to buy the dollar or who already have positions buying the dollar against other currencies. So outside of that, we don't have any other major event happening the day to day. So more events will be happening later in the week. Of course, just past midnight, we'll be having the employment change from New Zealand at 12:45 a.m. Average cash earnings or wage growth in Japan at 2:30 a.m. Then we'll get the services PMI from Spain, Italy, as well as France and Germany, and of course, the total for the Eurozone at 12 p.m. midday. We'll be getting the private sector non-farm employment change, or what we call the ADP non-farm employment change at 4:15 p.m. tomorrow. Then we get the ISM services PMI as well as final services PMI at 5:45 p.m. and 6 p.m. tomorrow. Later on, we will observe the crude oil inventories data at 6:30 p.m. So on that day, we'll be having a major interest rate decision by the Central Bank of England, or simply Bank of England. And there's an overall expectation that the bank will be cutting rates by 25 basis points from 4.75% down to 4.50%. So as we have been saying about interest rate decisions, we tend to see the market pricing in this information earlier in the week and tend to respond opposite after the news announcement. So this means whenever we are looking at a potential rate cut by a central bank, that should be negative for the currency. So in this case, we're expecting this to be negative for the GBP, but then we could be seeing the UK pound weakening way ahead of the rate decision on Thursday. And once the announcement is made, we could be seeing even the market reacting in the opposite direction, the pound even gaining after the announcement. So we'll be following this closely to see how the pound is performing against other currencies. So fast forward to Friday, get the official non-farm payrolls and of course the Canadian employment change. So the unemployment rate in Canada is expected to have shifted from 6.7% to 6.8%, with employment change being much lower than the previous reading, where in the month of January, the economy is expected to have created 25.5k jobs. And this is way lower than the previous reading of 90.9k jobs. So as for the US side, wage growth is expected to have maintained at the same rate of 0.3%, similar in December. Non-farm employment change, the US economy is expected to have created 169k jobs, much slower growth compared to December's 256k. Then the unemployment rate is expected to have remained stable at 4.1%. So remember, the last time the Fed had to cut interest rates, it's because the unemployment rate had shifted higher to a level of around 4.3%. But since then, it has slowed down a bit. We have seen 4.2%. We have seen 4.1%. In the previous reading, there was 4.2%, and in the most recent data, 4.1%, and we don't expect much of a change from here. So 4.1% is not that bad, but if we happen to see a shift towards 4.2, 4.3%, then that would call the Fed to activate its mandate and do something to make sure that the unemployment rate doesn't rise. So that's the overall expectation from the economic calendar. Of course, there is more news coming up in the markets today. So one of the highlights that I want us to focus on today is China hitting back with tariffs on US goods after Trump imposes new levies. So the additional 10% tariff comes into effect on all China exports to the US. And this basically means that anything and everything that China is selling to the US, they will have to pay an additional 10% tariff. So this is quite a slap on the face. And of course, Trump is saying that they need to negotiate, get a fair trading ground, and most importantly, the import of fentanyl from China, whether it's direct or through its borders with Mexico and Canada, must be addressed immediately, and that this is like a priority number one for Trump. So Beijing responded this morning with a 15% levy on US natural gas, 15% levy on US coal, and 10% on US crude oil, as well as farm or agricultural equipment. So on top of that, China started an anti-monopoly investigation into Google and imposed controls on rare earth exports. So far, as we speak right now, China controls a majority of rare earth metals in terms of supply chain. And if the imposing controls on rare earth exports, this could have significant impact on US tech companies. And in this case, the major focus is on Google. So Trump poses tariffs on Mexico and Canada for 1 month. Of course, the two countries came to the negotiating table. So both Mexico and Canada decided to send over 10,000 soldiers to their border to make sure that there are no more gangs across the along the borders, and there is no drugs, especially fentanyl, crossing the border into the US. So after this, we saw the Mexican peso making a very strong recovery to the dollar. And of course, the Canadian dollar also made a very strong recovery to the dollar after renegotiating and getting this done within 24 hours after Trump announced tariffs on them. So Mexico and Canada to bolster border enforcement. So China on Tuesday slapped tariffs on some US imports in a swift response to new US duties on Chinese goods, renewing a trade war between the world's top two economies, even as President Donald Trump offered reprieves to Mexico and Canada. So additional tariffs of 10% across all Chinese imports in the US came into effect at 12:01 Eastern Time on Tuesday, after Trump repeatedly warned Beijing it was not doing enough to halt the flow of illicit drugs into the US. So within minutes, China's finance ministry said it would impose levies of 15% for US coal and natural gas, and 10% for crude oil, farm equipment, and some autos. And some autos means that we could be seeing the electric vehicle market in the US being hit by some of these sanctions. So China also said it would be starting an anti-monopoly investigation in Alphabet's Google, while including both PVH Corporation, the holding company for brands including Calvin Klein, and US biotech company Illumina on its unreliable entities list. So separately, China's Commerce Ministry and its Custom Administration said it is imposing expert controls on some rare earth metals that are critical for high-tech gadgets and the clean energy transition. China's new tariffs on the targeted US exports will start on the 10th of February, the ministry said, giving Washington and Beijing some time to try and reach a deal. So Trump plans to speak to Chinese President Xi Jinping later in the week, a White House spokesperson said. So technically, we're expecting today to be quite a busy day, especially for the two administrations, and there's a very strong likelihood that that phone call might be happening today. So if that phone call happens today between the Chinese president and the US president, then perhaps they could find a deal or an in-between deal, maybe to delay sanctions, and that would be quite positive for the markets. But then if they don't get into a deal today, then we could be having some big reactions in the markets. So be on the lookout. If you don't have Trump notifications on, get them on, If you don't have Xi Jinping's notifications on, make sure you get them on, because these two guys are now the main guys moving the markets. They even are moving the markets more than central bank governors. So it's super important that you follow these guys, because their updates have the potential to move a lot of markets. So in terms of market reaction, there has been quite a number of things. One, there is the issue of volatility. So the escalation in trade tensions has already led to increased market volatility. Global stocks experienced significant fluctuations, with initial rallies in Asia Pacific markets giving way to declines as the news of China's retaliatory tariffs spread. For instance, Hong Kong's Hang Seng Index rose by up to 3.3% before settling at 1.8% gain. So in the US, futures indicated a drop in stock trading, with SP 500 and Nasdaq contracts both down 0.2%. So on the issue of energy, agriculture, and EVs, the targeted nature of China's tariffs suggests potential challenges for specific US industry. The energy sector, particularly exporters of natural gas and crude oil, may face reduced demand from China. Remember, China is the biggest importer of these products, potentially leading to lower prices and revenues. Agricultural machinery manufacturers and certain automobile producers could also experience decreased exports, affecting their profitability, and we could be seeing some of these stocks responding as soon as the New York session starts, and in Kenyan time that will be 5:30 p.m. So in terms of escalation, the renewed trade tensions have heightened investor caution. While some markets initially responded positively to the US delaying tariffs on Mexico and Canada, the swift escalation between the US and China has overshadowed this optimism. The upcoming dialogue between President Trump and President Xi Jinping is being closely monitored, as its outcome could influence future market directions. So as for oil markets, the US dollar has really strengthened amid the uncertainty, driven by its safe haven appeal. Conversely, oil prices have declined due to concerns over reduced demand stemming from the tariffs. Brent crude oil fell by 0.7% to $75.41 per barrel, and the West Texas Intermediate, otherwise known as US oil, decreased by 1.7% to trade at $71.9 per barrel. So, as we have been saying, ever since the Trump administration came into power, the number one bet that we'll be having, and this is my personal opinion, is that oil markets are going to significantly reduce. And this is mainly because of his policy, where he said drill, baby, drill, basically meaning that he's looking to expand US oil production. He has already opened the offshore drilling, basically meaning that he's looking to pump so much oil in the markets that prices really go down, and it also helps with the inflation situation in the US. So overall, the long-term expectation for oil prices is to go down, since Trump is spearheading this, and he has been very bold and direct about it. So as usual, and as we continue in this session, remember, it's not investment advice. It's not a recommendation to trade. So you should always do your own due diligence. So on the share side, remember, Google is expected to be reporting its earnings report today, and the Q4 earnings call is coming up at 4:30 GMT -5. So it's 4:30 in the US time or Eastern time, not Kenyan time. So that should be around 11 p.m. right after the market closes. So far, yesterday's performance, the stock was down 1.44%, but then after the market closed, it gained by 1.17%. But then, with the news of China imposing sanctions on Google, especially on the supply of rare earth metals, then we could be seeing a much bigger reaction today. So that's one of the number one stocks to be watching or adding to the watch list today. So the best performing stock as per yesterday was Palantir Technologies, after they reported better than expected earnings. So with the stock gaining 1.52%, reporting its earnings right after market close, and then in aftermarket trading, we saw the stock basically gaining by 22.75%, which basically brings its year-to-date return to 11.37%. So Palantir is doing really well. So making a 22% gain in aftermarket trading was quite a big surprise, especially considering that its earnings were nowhere close to the gain they made. So the stock gained by about $39 billion. But then if you look at their earnings, this was September 2024. Here we are looking at a revenue of less than $1 billion, of $725.52 million, which was up 29%. Operating expense up 13%, but the net income, which was the most surprising, it was up 100.72%. And this is an year-over-year change. So it gained to $143.53 million. So clearly, it's a company on a roll, and it's beating earnings almost every quarter. So notice how their their revenue have generally been increasing. Earnings also having a gradual increase quarter over quarter. And if you check the annual performance, it's a company that has been making losses for the last 4 years. But then we are looking at the first year where the company is turning a profit and basically leading in the AI business. So that will be an interesting focus for the day. So as for the outlook for Google, Alphabet is set to release its results for the fourth quarter after the bell on Tuesday, kicking off a second week of earnings for US tech giants, as Wall Street looks to see how the search behemoth will respond to the threat of Chinese startup DeepSeek AI models. So the Google parent is also expected to offer updates on its efforts to turn massive AI investments into new revenue streams and the broader performance of the massive digital ad market. So remember, Google was just hit last week. That is the stock performance by DeepSeek's AI models, which were better than Google's. So we'll be looking to see how they respond. In comparison, if you look at Meta, which is the mother company that owns Facebook, Instagram, WhatsApp, these guys have had quite a good performance. And so far, I think Facebook have had a 9th consecutive day of gains. So people are really betting positively on Meta, since it has majorly been using its AI products to improve its other products, which are indeed turning into some real revenue for the company. So Google and US tech companies, more generally, are still reeling from the breakout success of DeepSeek's version 3 and R1 models, purportedly developed for a fraction of the cost of Google's Gemini and OpenAI's ChatGPT. DeepSeek's efficiency raises questions about whether Silicon Valley is overinvesting in AI hardware. So Alphabet is expected to report earnings per share of $2.13 on a revenue of $96.6 billion for the quarter, up from $1.64 per share and $86.3 billion for the same period last year. And of course, as you analyze Google's earnings, we also try to focus on one of its major products, which is Google Cloud, as well as the leading streaming business, which is YouTube. So we'll be trying to understand the earnings, performance, and revenue from YouTube, as well as its cloud business. So outside of that, I believe we've covered some of the major news that are currently impacting the markets. So it's time we jump and try to understand the current technical analysis where prices might be headed next. And once we cover that, hopefully everyone will approach the markets from an informed perspective. So let me check on the comment section and see if there's any questions to address before we cover the last part of the session. So morning, Robert Kovale, on Sports TV, Wangari, Rono, Charles, and Peter. Thank you guys for the comments. I can see Lucy Njoki, Irene, thank you, and good morning, everyone. So first comment I'm seeing here from Wangari. OPEC Plus removed US government's EIA and consultant registered as secondary sources. How is this going to impact on WTI? Again, how will Chinese tariffs on US energy affect trading WTI today? So tariffs are expected to basically increase the cost and reduce demand. So in this case, if a country is slapped with tariffs, then their goods become more expensive. So this basically reduces the demand. And of course, if demand goes down, prices also go down. So considering the volume of business that is pushed by China, then we expect to see oil prices responding negatively, and it has already started happening. So if you look at the WTI prices, if you look at Brent prices, they have both been dropping this morning. So as between Trump and the OPEC plus countries, Trump is pushing for the OPEC plus countries to be pumping more oil into the markets. So far, they haven't done so. So we believe that Trump will be turning a page on them. I believe he's moving page by page. He started with Colombia. He went to Mexico, Canada. Now he's looking into the Eurozone. Also, China is in the mix. So by the time he focuses on the OPEC, we'll be just here waiting to see what happens. So that's why I'm saying you put on notifications on Trump. But as per now, the market reaction is quite negative for both Brent crude oil prices. So another comment here, most of the gaps that were created yesterday have since been filled. Can we now say that the market is balanced and the technicals can now work normally? I don't think there's a normal with Trump, given the way he's pushing a lot of things at the same time. So while we might want to get back to normal price action trading, he's still a big factor in the way the markets move. And it's very important to follow what he's saying because he's having a much bigger impact, even bigger than when he was elected. So yes, we are returning to some kind of normalcy since the gaps were closed and the tariffs were delayed for 30 days for both Canada and Mexico. But then who is to tell if he's not going to announce more tariffs on the UK, maybe tariffs on the Eurozone? So all these are wild cards that you have to be concerned about. Even if you are a technical trader and you don't focus on fundamentals will still find you and they will affect your trades. So it's much better to follow closely on what's happening around Trump and his administration because it's having a much bigger impact on the markets. So morning, Violet. You can see Joseph in the house. Yes, they're expected to talk today, but also there's this thing between superpowers. Trump doesn't want to call Xi Jinping in a place where you are having a trade war. You want him to call you. Xi Jinping doesn't want to call Trump. He wants Trump to call him. So in such a scenario, you're not sure of the timelines unless they have a call scheduled. But we know that the talk is going to happen sooner or later because the private sector is affected and the private sector in each country will call their president and ask them to negotiate so that they don't make unnecessary losses in something that can be negotiated over the table or over the phone. So morning, Nahashon Koril, Teja. So this is a good question. I wanted to join the Kakamega training workshop. How do I register online? I think it's a pretty simple way. All you have to do is to go to our socials. Go to our Twitter, go to our Instagram. You'll find a link on bio. If you go to the FX Pesa page, in Twitter is FX Pesa official. On Instagram is FX Pesa. So click on the link in bio and you'll find a link where you can register for the class. And once you register, that's all. The class is free and it's happening this Friday. And make sure to purpose to attend. If you have another friend who is a trader, bring them to the event. You're almost welcome. We are hoping to make a big impact on that day. So another good question, how long will US new oil drilling take to hit the market? So this is not like the US is starting new drilling from scratch. This is drilling equipment and machinery that was already there, but it was banned by the former President Biden. So it's more about reactivating those drilling machines and basically getting more oil to the US. So this might take a very short while. And since he signed this on day one, that was the 20th of January, I believe in the second or third month, we should start seeing some impact. Remember, the markets will not wait until oil is already in the market for them to trade positively. Of course, the markets are always looking ahead. So we could be seeing oil prices dropping way ahead of that. So also one more question before we get into technical analysis. What's your take on JPY? I see more potential strength. Yes, we expect the Bank of Japan to continue hiking rates. And as a result of that, we expect the Japanese yen to continue strengthening in the markets. So overall, the long-term outlook for the Japanese yen is more gains for the second and the third quarter of this year. Good question about training in Kisumu. I believe the training we have scheduled right now is in Kakamega, not Kisumu. I know it's close by, so if you are able to make it this Friday, please come. Then once we organize something else, we'll keep you updated. So let's get this to the technical analysis thingy. This is China A50 index, and it had quite a volatile session this morning with a big rally at market open, a sharp drop, and then an immediate recovery. So, of course, the gap that was created on Monday has already been crossed, and now we are trading much higher than that, which implies that with China applying sanctions on the US, the market is responding positively, and we expect to see higher prices. So potentially, these are key level targets on previous highs, and we could be seeing the market headed for these highs. Of course, the most immediate expectation is this morning's high of 13,106. And if we breach this, then we go to 13,243. So we also have the Hang Seng Index or the Hong Kong 50. So it's also had a big sell-off on Monday at market open, that's yesterday, but then immediately recovered, then pushed even higher at market open, pulled back, grabbed some liquidity and rallied even higher. And now we are looking at a potential rally from these levels. So the previous highs are around these areas here, that is 21,306. So we could be expecting the market to continue rallying, and with this positive response, we could be hitting 21,306 in the not so distant future. So these are level that has been rejected twice, and the market will likely be retesting that area again. So outside of that, just want to highlight some of the assets that we have not been focusing on mostly. Here we have the Mexican peso. So opened with a big gap on Monday, and then throughout the trading of the day, it reversed and covered the whole gap and even moved lower. And now with Mexico having a good agreement with the US, we are seeing the Mexican peso regaining its strength against the dollar. So clearly, even from a daily perspective, that was a very strong rejection of higher prices, which implies the likelihood of the market extending this bearish momentum with a potential for the market going for around 20.18326. So this seems like the likely outcome for the next move, given that this one was a major key level support. The market broke this area here, retested, and now could be headed much lower to 20.18326. So outside of the dollar trading against the Mexican peso, now I believe we can go back to the mainstream assets that we usually cover on these sessions, and we can start with the dollar index. So the dollar index, which has been pretty strong, had erased some of the gains it had made on Monday morning, and now this morning you can see that it started on a positive note, but then after China's announcement, we are seeing the dollar index still giving back some of its gains. So in this case, we could be seeing the market retesting the previous low, and the previous low is the one that we saw just around midnight, around 108.165. And with that in mind, we could see other currencies regaining against the dollar. So for the Euro USD, it spent the better part of the day attempting to close the gap. Then it dropped again, but now we are seeing another attempt to get back to the previous high. So in this case, potentially retesting 1.03526, which is where the gap started. So the gap is a little bit higher, sorry. It's at 1.03590. So it wasn't fully closed yesterday. So it seems likely that the Euro USD will be closing this gap later today. So for Pound USD, we are basically seeing a market that basically closed the gap immediately yesterday, pulled back to this level and now bounced, which implies a likelihood of a continuation. So we could be seeing a continuation in Pound USD, especially targeting this upper trend line that has been working as resistance. So this morning we already saw the pound bouncing from this area here, and now it seems like the market pulled back to this area here, bounced, and is now moving to retest the upper trend line with a potential for a break on the upper trend line here. So for now, a very short-term momentum looking to retest this trend line here. Then for our USD, we had the market closing the gap immediately, pulling back, and now it seems like the market is going for another bullish trajectory. So given the correlation between the Australian dollar and gold, it's more likely that we could be seeing the Australian dollar moving a bit higher, especially after grabbing all this liquidity yesterday. So notice how this was a major support area for the Australian dollar, dropped quite rapidly and then bounced immediately, which implies that we could be headed to previous resistance areas. So in this case, potential rally to the previous high at 0.62430 and a potential expansion towards the 0.63 price level. So for now, a potential over retest of the day's high and then a potential extension here. So for the dollar yen, we have seen the market really struggling to move lower. So yesterday we had the market retesting this area here, and immediately after it got here, there was a sharp drop. So this morning another gain, but overall we know that the trend has been bearish. So the trend has for USD JPY has been bearish, and anytime the market has approached this trend line, or we have been seeing is a big sell-off. Save for yesterday when it broke for the first time, pulled back downwards and then rallied, and now it seems like this market is changing its trajectory or dimensions. So if I remove these arrows here, I'll try to give the highlight easily. So since this area here, you'll notice that this is a sequence of down, up, down, up, down, up movements. So it's more of a sideways moving market, but eventually, once the dollar strength wins, we expect the yen to continue strengthening against the US dollar. So from the daily time frame perspective, you can see the major swing here, and then the reversal after the Bank of Japan decided to hike rates. And now, as we enter the second month of the year, it seems more likely that the market will be extending the bearish momentum. So for now, for our chart, we are seeing a rejection. And from the 1 hour chart, we can already see that there is more attempts for the yen to strengthen against the dollar and likely go to retest the previous low. So you'll be observing this closely. So for the Nikkei 225 index, we have been observing this range for the longest. I believe it's almost 20 weeks that we have been observing this. So the market has been in a range, swinging up and down, and now we know that we are on a downswing after we go to this high. So on this downswing, it seems more likely that the market is looking to retest yesterday's low today. So we could be seeing an extension of the bearish momentum towards this area here. So for now, the focus is on the Nikkei 225 index retesting the lowest price that we saw yesterday. So as for gold, it's still a very strong bullish momentum. We managed to break above our major resistance around 27.86. Market moved higher, so we saw a new all-time high here on Friday. Then on Monday, another new all-time high. So it would be crazy to think of shorting gold. So it's more of a market that requires more patience. And by patience, it means that when the market pulls back, then we start looking for bullish positions. And in this case, it seems like the market is pulling back. So we keep observing these pullbacks and wait to see signs of buyers coming back into the market to identify buy opportunities. So far we don't have one. So we continue monitoring this area here. And once we see the opportunity, then we jump right in. So as for Brent, the attempt to go up was faced with a strong selling activity in the New York session yesterday. Today, we are seeing an extension of the bearish momentum. And now that we've broken this major support area, it seems more likely that we could be seeing an extension of the bearish momentum to an area that served as a previous low, and this is around 74.092. So clearly a very strong bearish momentum on Brent oil prices. So from the 1 hour chart, this is how it looks like. So I would have to zoom out so that you can visualize the target around $74.092 price level. And this might as well be the favorite chart of the day, given the impact of sanctions and the volatility they are causing in the markets. So it's very easy to identify opportunity for a short selling positions towards $74 per barrel. So US equities, after closing the gap, we are seeing more bearish momentum. And now that China is slapping more sanctions on the US, this leads to more bearish momentum. So we should be expecting to see some further downside. Unless something changes in the market, it's more likely that the US equities will be bearish today. So we're already seeing it on the Nasdaq. On the Dow Jones, it's the same. Of course, we should be expecting the market to be filling these gaps. The gaps from these major candlesticks, notice the big slide down, the big slide up. And now that the market is back towards the bearish momentum, we expect a big easy slide to 44,012 for the Dow Jones. So the Russell 2000 index also doing the same thing. So strong bearish momentum. SP 500 also having a big sell. So we should be looking at further bearish momentum. So Bitcoin made an impressive recovery yesterday. If you look at the range yesterday, between the lowest price and the highest price, we were looking at over $10,000. So after getting to this high and closing the gap, we are seeing more bearish momentum in line or in correlation with US equity indices. So much more bearish momentum is expected. Dollar against the Swiss franc, it managed to close the gap here. And now we are seeing some further weakness in the dollar against the Swiss franc. And of course, if I remove all this noise in my chart and we try to understand the prevailing price action, on the 15 minutes chart, it seems like this market have had some significant support area along this line here. And these are served in the last 5 days. And now we are seeing the market almost breaking this particular trend line. So clearly, if there's a break, we start looking for shorts. But then if we happen to see a bounce similar to what happened here, then we start looking for buys. So it's a wait and see kind of scenario in that particular market. So for New Zealand USD, managed to close the gap. Now it's moving back downwards, meaning that the New Zealand dollar is giving more space to the dollar. So we could be seeing the market heading further downwards as the dollar continues strengthening against especially these Asian currencies. So lastly, we are seeing silver. We predicted this breakout here and a very strong rally to 31.425. Of course, the price was much stronger and moved much higher than we expected to 31.674. And once it got to that area, notice how the market really struggled to break on Thursday and Friday. Then on Monday, quite a performance. Notice the sharp drop here, the sharp rally in the market remaining here. And now it seems like the buyers are coming back. We can already see the momentum coming in. But then the market has not yet broken the resistance. So we continue observing this area here for a potential break. And if silver breaks above that area here, then the next target will be that $2.15. So that's it for the day. Thank you very much, everyone. So let's check to see if there's any questions we may have missed. So I believe I've covered all the questions. So as we approach the end of the presentation, remember that we have a new episode of the Bullish Banter podcast. It's covering a lot of the content that's happening in the global markets, especially with Trump. So all you have to do, I'll try and share these live. So share screen. So this is YouTube. All you have to do is to go to FX Pesa. You can just search FX Pesa on YouTube. Go to the channel. So from the channel, then from here, click on our podcasts. Then you'll find the latest podcast here. Sorry for that. So in the latest podcast, we cover the triple threat of Stargate, which is a large-scale AI infrastructure project, the Trump tokens and tariffs, and the tremors it's causing in the markets. Of course, once you go through this, you'll understand a lot more of what's happening. And in also one of the most recent, we also covered 2025 market insights, Trump's impact, Bitcoin halving, and top trading strategies. So all these podcasts are available for you to take advantage of. We also have new episodes on the Financially Incorrect podcast. And of course, if you are within the areas of Kakamega, we have an event happening on this Friday. So that's it for the day. Thank you very much, everyone. So if you would like to begin trading and you haven't started yet, check out the links in the description below to get a link to register for an account. And if you just want to learn fast, then please check out the Novice to Pro. It's available here on FX Pesa YouTube. So all you have to do is to search Novice to Pro, and that's it. You get the Novice to Pro course here. You go through it. If you have any questions, feel free to ask me, and hopefully you get to enjoy a good journey in your trading. So thank you everyone, and I hope to see you on the next session.